Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, US investors continue to climb the wall of worry. This has seen the major Wall Street indices recover their sharp declines over the past month. Last week, the Nasdaq gained more than 7% in the wake of President Trump's Middle East tour when he announced some major deals involving the US chip makers. This is how Louise Bedford from Trading Game sees the Nasdaq chart.
Starting to get into an area where it is tough to trade. Over 5% is tough to trade, but over 7% is incredibly diabolical. So we are at 6.10% in volatility, and look at that gap. Oh, you don't usually see this in an index, but we do have a definite gap upward in the Nasdaq. So this is a volatile little one at the moment, but we are in limbo compared to the Australian market. So if you're looking as a strategy to invest in ETFs, index-based ETFs, you'd be putting money into the Australian market currently, but you'd be getting pretty close to wanting to reinvest into the Nasdaq 100 ETFs.
Well, for a look at the Australian share market in the wake of a V-shaped recovery, Thomas Atkinson from FX Evolution identifies the FOMO level we should be looking at.
Levels are being reached, so obviously all-time high, very close now, a little red box up there at the top around the 8,400 to 8,500 level. We've already gone past the most traded zone, which I think we were on the show last week talking about this, and I said all of this area looks very good for us to hit. The great thing about the Australian market is it's done the repair. So similar to the S&P, we've recovered, we've gone above the lower highs, we've broken structure to the upside, and this again suggests that if we get pullbacks, even if they're a little bit deeper in the future, that there's probably going to be a fun buyer. One of the things I'm seeing through a lot of the Western markets is that a lot of fund managers have missed out on some of this rally, and that doesn't tend to make anyone happy. So markets, when they pull back, I would say there's going to be a little bit of lining up to be done. Key levels to watch out for on the Australian market, probably the 8,000 if we pull back. And for the upside, I think we're getting very close now to a resistance, 8,400, 8,500 on the charts.
Well, stocks that are seeing a lot of momentum at the moment are the iron ore miners. Thomas Atkinson analyses the Fortescue chart.
Fortescue has what we call in the technical analysis world an inverse head and shoulders, and it's quite a well thought out pattern. It takes time, as you can see here, months to create a pattern like this, and we're breaking through what we call the neckline at this stage. So what I've done is I've highlighted a couple of key things that I think we need to be paying attention to. One is on the left-hand side, what we call the most traded level. Now, previously Fortescue was in a pretty big range before the Feb, March, April sell-off, and it traded the most at $19.20. That was the most popular level for, traders to be buying or selling at. So that's going to be a key level for technical analysts, especially if this continues to rally up. And another thing is the neckline or the head and shoulders pattern, which would complete at the highs at around $20.50, 21. The two key levels to look at from a technical level.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.